So if you know that you're going to risk $100 a trade, that's about 4 to 5 trades. Now, I recommend limiting yourself to maybe 3 to 4, just because most people do become very unhinged and start to trade very degeneratively after that third trade. Me, myself, I've been through that as well. Sometimes I've recovered all my drawdown after that, but it still is, risky. So just to confirm, there's a lot of ways to do it, but you want to be consistent in your approach. You don't want to be inconsistent with how you approach the markets. The markets are very serious. So a few of the things, let's see. So we talked about the how much to invest per trade, and then how much profit is enough to close out a trade. Now that's a trick question. Every trade you take is going to be different, and you need to focus on the actual trade, not the profit. Obviously, you want to manage risk, meaning you don't want to risk more than a certain amount. But for profits, we want to use target levels. Now, when you're first starting, you're going to want to be consistent and have small winners. So I recommend having like a 1-to-1 ratio, so that way you can have a lot more winners and you can close more profits. I would say if you're able to get to the point where you can close $250 a day, you're really doing well, and then you can just multiply that across more accounts. The consistent $250 a day can pretty much replace any American's, average job, not a top job. But as soon as you grab two prop firm accounts and you're doing that, you're basically making 6 figures. So if you're able to, be consistent, um, over time, you'll be able to grow the different accounts that you purchase through prop firms or even live accounts. It's all about percentage. So for me, the return on investment for live for paying for props is a lot higher than live accounts, but I will be using a live account once I have certain additional capital. I want to have a huge live account, but just to confirm, it does vary, based on the trade. So like, let's say you have a 50K account and you're trading and you have $2,500 drawdown. For me, I'm targeting about 125 to $250 a day. Now, recently I've been making a lot more than that, sometimes 200 to 600, 700, sometimes, $1,000 a day on certain accounts. But that's because I may have a copy trader. In my face, I typically like to see 100 to 200 and change. And my rule is about 100 and change per trade. So I'm always going for a 1-to-1, and then I'll start adding to my winners. So that's the key to my trading style. Everybody's different, but for profit, you have to get used to at least either adding, letting, like holding winners a little bit longer, but also scaling out. So there's a lot of variables to it. It's not as simple as just set it and forget it. So there's a lot of, people who say just set it and forget it. Maybe that does work for them. For me, I feel like adding to trades helps. I feel like managing the trade helps. Some people overmanage, close out, get back in, close out, get back in. So you have to manage yourself and make a decision whether it's actually worth it. Now, I know I went over a lot of stuff, and the last one is going to be how to recover from drawdown. So hypothetically, if you ever go into drawdown, let's say you lose a few trades, what you want to do is you want to reduce your risk. You want to reduce your risk in half. And until you recover half of whatever you lost, don't increase your risk. Now, this is something that ICT said, Michael Huddleston, the person who created Inner Circle Concept, smart money trading. You want to focus on reducing your risk. So if you're trading and you're using 2 contracts, you want to go to 1. So what that's going to do is going to allow you to lose less per next losing trade, and then that way your equity curve can be a lot smoother. So the average person, if they keep risking and then they start risking more to recover drawdown, they end up usually losing and creating a deep drawdown or blowing the account. So the key to my success has been reducing risk whenever I'm unsure. Even today, I was a little bit unsure, so I decided to just withdraw all my money and just end it for the week. So I will be back next week. I mean, I did trade a challenge today, but none of my live money. So I will be back next week focused, but you want to always think risk management and the perspective of recovering from drawdown. You need to make sure that you're making a plan. Like, whenever this happens, I'm going to do this, because you don't want to be trading degeneratively to try to recover from a drawdown when all you really need to do is take your time and then manage risk. So make sure you're managing risk consistently and you're not acting out because of whatever occurred. Make sure you're thinking and you're planning and you have goals in mind to actually reach the stars. Don't just, dream. You need to have a plan. So my plan is try to lose less than 300 to 500 a day. That's my goal. I typically don't float that much down, but I have before, and I've floated worse before. So it's like I've been there at the degenerative stage. At this point, as long as even my win ratio, if it's a little bit negative, that's fine. These prop firms allow for a negative win ratio. So my ratio with props is like 1.5 to 1. So my average loser is a little bit bigger than my winner, but I win more than I lose. And then I definitely add to my winner. So that's part of the game. You have to figure out how to kind of game this, not even game the system or the prop firms, but like game your account. Like, if as long as your winners add up to more than your losers, you're profitable. If you're profitable, you can take care of your family. If you can take care of your family, what do you care about?